Dear students, this lecture is for 5th Sem BCom. The subject is Accounting for Managerial Decision. Today's topic is Inflation Accounting and the subtopic is Lease Accounting. Unit 5, Session 54. Students, the learning objectives of this session is to acquire practical knowledge on lease financing in different situations. At the same time, the session outcome is that students will be able to know that leasing is a new source of financing capital assets where a company forced to look for alternative means of financing the projects. Firms are required to go for massive expansion, diversification, and modernization. Essentially, such projects involves a huge amount of investment, high rate of inflation, severe cost escalation, heavy taxation, and meager internal resources forced many companies to look for an alternative means of financing the projects. Leasing has emerged as a new source of financing capital assets. Let us try to solve a problem in order to understand the concept. Shashi Leasing Company Limited provides you the following information and requests you to suggest whether the proposed lease is feasible or not under net present value method. The cost of asset 5 lakh, cost of capital 10%, rate of depreciation is 10%, tax rate 35%, lease rental per year rupees 1,50,000, the present value of annuity of rupee 1 at 10% for 10 year is 6.145. The solution is like this: calculation of cash flows after tax. Lease rental I have taken as 1,50,000 given in the problem. This will be subtracted by an amount of depreciation, that is 10% of 5 lakh will get the amount as 50,000. Later on, after subtraction of depreciation from lease rental, will get an amount of 1 lakh called as income before tax. From this income before tax, we are supposed to subtract the tax rate, that is 35%. We'll get an 35,000 of tax. After that, we'll arrive at income after tax such as 65,000. For this income after tax 65,000, we have to add back the depreciation, that is 50,000. So at finally we'll arrive at cash flows after tax 1,15,000. At last we have to calculate net present value, that is present value of cash flow after tax to be subtracted by present value of cash flows cost of asset. So I have taken 1,15,000 to be multiplied with the annuity rate of 6.145. I'll get an amount of 7,66,075. 7,06,675 to be subtracted by an amount of 5 lakh, that is cash outflows. Finally, I'll get a net present value of 2,06,675. The conclusion is that Shashi Leasing Company can let out the asset on lease since net present value is positive. Thank you.